Good afternoon. Here are the closing market comments for Tuesday, October 26th. Corn and beans traded on both sides of unchanged, managed to close with some small gains, but wheat was the winner today, closing up with double-digit gains. The initial crop rating for wheat coming in at 47% good to excellent was the lowest since 2001 and was seen as supportive for the wheat market. December corn finished 2 1/4 cents higher at 5.71. July corn up 3 1/4 at 5.94. November soybeans gained a penny and a quarter at 12.19. And July soybeans down 3/4 cents at 12.43 1/2. Kansas City December wheat up 16 3/4 at 7.38 1/2, and Minneapolis December wheat up 13 1/4, finishing at 7.45 3/4. Outside markets were relatively quiet today, with the exception of the dollar, which had a big rally. But crude oil traded on both sides of unchanged, currently very near unchanged at 82.51. The gold market also near unchanged at 13.38. The U.S. dollar saw a big rally. It's up 65 points today at 77.96. And the stock market down just a little bit, with the Dow 24 points lower at 11,139. Livestock markets were mixed, with December cattle finishing 55 cents lower at $100.10, and the December hogs up 22 cents, finishing at 68.67. News items in the corn market today. Harvest is now 83% complete versus 20% last year and 49% on average. So the record harvest pace continued. Of course, that is slowing down now with rains in most of the Midwest. Extremely strong low pressure centered over Minnesota is generating very strong winds across most of the northwestern belt. 70% of the unharvested corn are in the states of North Dakota, South Dakota, Nebraska, Minnesota, Iowa, and Wisconsin, and some lodging and field losses are likely in these areas. U.S. and world stocks of corn and other feed grains are very tight, and current balance sheets indicate that some demand rationing will need to take place to keep stocks near pipeline minimum levels. Typically, that's considered about a 30-day supply. At this time, it does not appear that prices have reached a level that are causing significant demand rationing, as many of the end users are also seeing product prices going higher as well, for instance, cattle and ethanol. The USDA November crop report, due to be released on November 9th, could be significant in determining just how aggressive the rationing process will need to be as we move into the winter and into the spring. In soybeans, harvest is now 91% complete compared to 42% last year and 72% on average. We've got some harvest delays across most of the Midwest here over the last few days, but overall, harvest wrapping up at a near record pace. The weekly export sales report on Thursday is expected to show very large numbers. China has been buying beans on almost a daily basis. World demand for beans, meal, and oil is very strong, and it appears that the USDA will increase demand estimates in the November report. Some of the increase in demand that's expected could be offset by a small increase in the U.S. soybean yield, as many analysts believe that we could see a small yield increase in the November report. In the wheat market, U.S. winter wheat is now 88% planted compared to 44% on average, and the crop is 64% emerged, which is right on the 5-year average. Despite planting being on track and as well as the emergence, the overall crop condition rating for the U.S. crop came in at 47% good to excellent, and that compares to last year's initial crop rating of 62% good to excellent. This is the lowest initial crop rating for winter wheat since 2001 and is one of the items that was very supportive for the wheat market today. The Australian wheat crop may be reduced in the November World Ag Outlook Board report coming out also on November 9th. Dry conditions in Western Australia and prolonged wetness in the east are likely reducing yields. Another supportive item right now for wheat is the wheat-corn ratio. That was 1.84 to 1 in August and has fallen all the way down to 1.17 to 1 currently, and wheat is becoming quite cheap relative to corn. Taking a look at the wheat-corn ratio on a chart, and this is simply the price of wheat divided by the price of corn. Back in early August, when Russia announced their grain ban on all grains, wheat was trading over $8 per bushel, while corn was a little bit over $4 per bushel, and the wheat-corn ratio nearly 2 to 1. In simple terms, wheat was nearly twice the price of corn at that time. Since then, Wheat has chopped sideways and even worked a little bit lower while corn has been trending higher, and that wheat-corn ratio is now just in that 1.2 to 1 type ratio. As we can see on this graph, that the wheat has become quite cheap in relationship to corn, and overall should be a supportive factor as we go forward, especially if corn can maintain its current prices or even work higher. Taking a look at our December corn chart, really not a lot has changed over the last 4 or 5 days as corn continues to chop almost straight sideways here. We've got significant support at 542s, the lows that were established earlier last week. And we have overhead resistance at 588, the highs posted just a couple days following the October crop report. The overall trend in the corn market is still up, and most analysts believe that it's just a matter of time before corn pops above the previous highs and works into the $6 range. And I think that one of the key components as to how quickly or if in fact we can see corn up over $6 will be the November crop report, which comes out on November 9th. Turning to our November soybean chart, soybeans have a very impressive uptrend in place. That trend is actually starting to accelerate somewhat to the upside as demand continues to be very, very strong for soybeans. Today's high testing the previous highs right up at that 1223 level. We've tested it a few times, but today's close, actually the highest close we've had on the November soybean contract. The chart perspective for beans is very, very strong. But in the short run, we do want to be a little bit cognizant of the fact that the technical indicators are getting very overbought, which does mean we could have a short-term correction. But the trend is very strong, and there's no indications from a fundamental perspective at this time that is indicating that that overall trend is going to change. Turning to our Kansas City December wheat chart, wheat had a very nice bounce today, being helped out by a crop condition rating of 47% good to excellent, the lowest crop rating for the initial winter wheat rating that we've seen since the year 2001, and that was one of the items that allowed us to see some support in the wheat market today. But as we mentioned, wheat is relatively cheap even after today's bounce in relationship to corn, and therefore I'm not looking for wheat to establish any kind of a downtrend unless grains in general head lower. That'll wrap up this afternoon's broadcast. Thanks for joining us, and have a good afternoon.